discussed about what is financial institution. So financial institutions, as yesterday also we have discussed about financial institutions. Okay, so mainly the financial institutions are banks. Okay, bank and banking like commercial banks, and what are the different cooperative banks, what are the functions of commercial banks, what are their main functions, how they deal with the money, everything we will discuss. So first, now let us learn about bank. Okay, so what is a bank? A bank is an institution which deal with the money and credit. Okay, it accepts deposits from public and make those funds available to who need them and helps in disbursements of money from one place to another. As earlier we discussed, we know that whatever the surplus fund is available with the individuals for sake of some interest, these individuals will deposit their money in the banks, and for users, those who want to use, those who are in need of money, the banks will provide money to them in the form of loans, and they will get some interest from the borrowers. Okay, so we can understand by this is that bank is a bridge between the borrowers and depositors. Okay, so here according to Crowther, a bank collects money from those who have it to spare or who are saving it out of their incomes, and it lends this money to those who require it. Okay, and according to Indian Banking Regulation Act 1949, banking means the accepting for the purpose of lending or investment of deposits of money from the public, repayable on demand or otherwise, and withdrawal by check, draft or otherwise. Okay, so yesterday we have discussed about financial institutions. In financial institutions, the chart yesterday what I shared you the chart, it is banking and non-banking, that financial institutions are segregated into banking and non-banking sector. Again, banking sector is segregated into organized sector and unorganized sector. As we have discussed that banks comes under organized sector, and RBI is the apex body of all the commercial banks. Okay, then we have unorganized sector. Unorganized sector consists of indigenous bankers, money lenders, state, shawkars. Okay, again, when we talk about organized sector, we have commercial banks, we have foreign banks, we have RRBs, we have cooperative banks, and we have regional rural banks. Okay, so in our class today, we are going to discuss about banking, one of the important financial institutions of our India, that is banking system. Okay, so first we'll discuss about commercial banks, what actually the commercial banks means. Okay, so commercial banking, or also known as business banking or hello, is anyone is there? Is I audible? Excuse me. Okay, commercial banking, also known as business banking or institutional banking, refers to banking products and services designed for corporation, institutions, and sometimes governments. Okay, so in addition to deposit products like checking and saving accounts, commercial banks offer merchant services, treasury services, and other corporate oriented products. Okay, so here what actually commercial banks means, what actually the commercial bank deals with. So commercial banks mainly deal with the money credit. Commercial banks usually may be defined as institutions which accept checkable deposits of money from the public and also use the money with it for lending. Okay. So only accepting deposit do not give the status of bank. So another important essential function is to make that these deposits should be offered for lending to others. So once when the surplus money by individuals will be deposited in the banks, and that money should be lended to others. Okay, those who are in need, that money will be lent to others. So commercial banks give short-term loans and advances, and we all know that these banks occupy a dominant place in the money market in India. Okay, so commercial banks are governed by Indian Banking Regulation Act, and as we all know, RBI is our apex body of all banks. Okay, so mainly what commercial bank does is they mainly deal with the credit, they accept deposits from the individuals and they lend the money to the users or to the borrowers. Okay, now we'll discuss about cooperative banks. Cooperative banks are a group of financial institutions organized under the provision of the Cooperative Societies Act of the states. Cooperative Societies of Act of the states. Okay. Then the main objective of cooperative banks is to provide credit to their members at low rate compared to the commercial banks. So their primary objective of cooperative bank is to help the vulnerable groups. For example, in rural areas, there are farmers, there are small vendors, and there are so many people who even doesn't know what they mainly depend upon indigenous bankers like shawkars, sales. They will take money, they borrow money for high interest and they feel so much difficulties while paying off. So RBI came with a proposal to start these cooperative banks and some groups will form. Okay, and then with less interest or low interest, these cooperative banks will provide loans to the small farmers and needies. Okay, so the cooperative bank system in India has a three-tier structure constituted by primary credit societies, urban cooperative bank, central cooperative bank, and state cooperative banks. Okay, so then we have specialized banks. Specialized banks, for example, we can see that foreign exchange bank, industrial banks, land development banks, agricultural refinance and development banks. All these means their purpose is to lend or to help the some special sector. For example, agricultural sector, industrial sector. Then we have small farmers like this. So these kind of banks are set up to help a specific group. Then these are called as specialized banks. When we talk about central banks, today there is central bank in each and every country. So every bank, every country has its own central bank. Okay, and that bank is also called as the apex body of all banks. Okay, it is to maintain the stability of the monetary unit. So it is pivot of the banking system. It does not undertake the functions of a commercial bank, but what it does, it tries to secure orderly development of banking. It acts as a bank of issue, banker to the government, banker's bank, custodian of nations, reserve, and controller of credit. So every country has its central bank, and our country we will call it as RBI, that is Reserve Bank of India. It started under a special act passed in the parliament. Okay, and these banks regulates all commercial banks, their SLR ratios, their interest ratios, or what are the activities they keep check on the activities of commercial banks. Okay, and they maintain stability of the monetary market. And these banks are mainly issue bank of issue and banker to the government and bankers bank. If any commercial banks want loan, so these RBI will facilitate them loan, and custodian of nation's reserve. So whatever our country's reserve will be there, they will act as a custodian of our country's reserve. So these are the main functions of central bank. So now we'll understand about the functions of commercial bank. So there are commercial banks perform many functions, and they are which may be classified as primary and secondary functions. So under primary functions, we have the main functions which the commercial banks deals with are: first function is they accept the deposits from the public, and second function is lending funds to the borrowers or who are in need of funds, and then third is use of check system, and fourth is creation of credit, or they are called as credit creators. So the primary functions of commercial banks are they'll accept deposit from the public, lending funds to the needies or borrowers, and use of check system, and then they are the creators of credit, means they give credit to the people who are in need. Then what are the secondary functions? Secondary functions are agency services, general utility services. So in primary functions, what kind of deposit these banks are going to accept? As we all know, fixed deposits, current deposits, saving deposits, recurring deposits, home safe deposits, all these deposits were come under accepting deposits. And the second one is lending funds. So how it lends funds to others? By cash credits, overdrafts, money at call and short notice, discounting of bills, and term loans. Okay. So here you know what is overdraft. Okay. So when bank grant overdraft facility to an account holder by which he is allowed to draw amount in excess of balance held in the account. Okay. And he has to pay that amount back to the bank within a stipulated time. So overdraft facility is only available for current account holder. Usually, who will open the current account? The business people will open the current account. So in an emergency, the business people can take some percentage of overdraft from the bank, and within the stipulated time, they have to pay back to the banks. So this is called overdraft. And what is money at call and short notice? Banks also grant loans for a very short period, okay, not exceeding 7 days to the borrower, usually dealers or brokers in a stock exchange. Okay, in stock exchange, they usually give loans to the dealers and brokers. If you see the one movie, last year it was, before 2 years, I think so, it was a big hit, 1990 scam. Okay, 1999 scam, sorry. Okay, that is a movie. If you see that there are some issues with the money at call and short notice, the movie where actually the whole movie goes on. Okay, so that we can understand what is call notice. Then discounting of bills. Discounting banks facilitate trade and commerce by discounting trade bills. So that Harshad Mehta story, 1992 scam. Okay, that Harshad Mehta story. In Harshad Mehta story, you can see that Harshad Mehta goes with some banker. He takes money and he plays gimmick with that money, and within some period he has to pay back. Then one journalist We'll find out this and the whole story goes on. How the scam has been happened at that time during 1992, and it is beautifully portrayed in Harshat Mehta movie. That story, Harshat Mehta story. It is web series, and after that, Abhishek Bachchan is also came with the same concept, Harshat Mehta story. If you see in that, you will understand what is money at call and short notice. Okay, and discounting of bills we have, and we have term loans also. Okay, so the next is creation, credit creation. How these banks are going to create the credit. So another important function of bank is to create credit. So credit creation is the natural outcome of the process of advancing loan as adopted by the banks. When a bank advances a loan to its customer, it does not give cash, but opens an account in the borrower's name and credit the amount of loan to this account. Thus, bank, whenever a bank wants to provide credit to its customers, grants a loan and it creates an equal amount of bank deposits. Okay, then banks can create such deposit by several times, and usually the banks have ability to create many times more than the deposits. Okay, so these are the main primary functions of bank, primary functions of banks. And secondary functions, in addition to the primary bank functions, the commercial banks also need to provide other financial services. They are called as agency services and general utility services. So what does agency services mean? What does agency services mean? So agency services usually bank perform some functions on behalf of their customers, such as collection and payment of credit instruments. Bank collect and pay various credit instruments like checks, bills of exchange, promissory notes, etc. Act and they'll also act as trustee and executor. So what does in as a trustee and executor, what kind of duty they perform is that they preserve the wills of their customers and execute them after death. Okay, if any person is don't want to reveal his will to its their kids or their family members, so what the person will do, the person will secretly write the will, and the bank will act as a trustee, and when after his death the will be executed after death. Okay, so then they'll also act as income tax consultancy. So banks employ income tax experts to prepare income tax returns for their customers and help them to get refund of excess tax paid by them. Then they will also act as representative and correspondent. So banks act as representative and correspondent of their customer. They get passport, travelers tickets, and book vehicles for their customers and receive letters on their behalf. So these kind of services comes under secondary services, and under secondary services, when the bank is offering these type of services, they are called as agency services. I hope you are understanding what I am explaining. And the next one is general utility services. So in addition to agency services, banks also perform some general utility services. And for example, banks deal with foreign exchange or finance foreign trade by accepting or collecting foreign bills of exchange. Okay, so again they may also act as referees with respect to the financial standing, and the shares floated by the government, public bodies and corporation may be underwritten by the banks, and banks also provide safe deposit lockers to the customers. So these are the primary and secondary functions of commercial bank. Okay, so we have so many means to learn about what actually commercial bank, and there are so many recent developments are going in commercial banks, like information technology is playing an important role in banking sector, and IT, actually IT offers a chance for banks to build new systems that address a wide range of customers, and we have electronic payments, electronic change, checks, real time RTGS, and electronic fund transfer. All these are also the additional services which can be provided by the using IT. Okay, so these are the different functions of commercial banks. Okay, then next we will understand about non-banking finance companies. Okay, so what is non-banking finance companies? They are registered under Companies Act 1956, engaged in the business of loans and advances, acquisition of shares, stocks, bonds, debentures, securities issued by the government or local authority, or other marketable securities of a like nature. Okay, then they purchase leasing, hire purchase, insurance business, chip business, but does not include any institution whose principal business is that of agricultural activity. Okay, so industrial activity, purchase of sale of goods and service securities, are providing any services and sale, purchases, construction of immovable properties. All these kind of they provide loans to all these, but they doesn't involved in any kind of agricultural activities. So what are the functions of non-banking financial institutions? So these are like commercial banks only, since they perform the basic function of attracting deposits from the public and making loans, but they cannot be regarded as bank as they need to follow cash reserve ratios and liquidation risk. So SLR, statutory liquidity ratio, cash CR, cash reserve ratio, all these should be followed by commercial banks. But here the difference between the NB, non-banking financial institutions, and banking institution is that these non-banking financial institutions doesn't follow any CRR, cash reserve ratios are they don't have any SLR, statutory liquidity ratios. So we will understand what makes these non-banking financial institutions differ from other commercial banks. So non-banking financial institutions cannot accept demand deposits. Non-banking financial institutions do not form part of the payment and settlement system and cannot issue checks drawn on itself. So deposit insurance facility of Deposit Insurance and Credit Guarantee Corporation is not available in the depositors of non-banking institutions. Okay, so what are the different functions of a non-banking financial institution? Okay, so first is asset finance company. The main function is asset finance company. So these are called asset finance company, which is a financial institution carrying on its principal way business, the financing of physical assets, supporting productive economic activities such as automobiles, tractors, generators, etc. So this will provide loans for the cars, tractors, automobiles. So when these are dealing with these kind of loans, they are called as asset finance companies. And then investment companies. Any company which is financial institution carrying carrying on as its principal business, the acquisition of securities, or known as investment companies. And the third function is loan company. Uh, uh, it is financial institution carrying on its principal business, okay, providing of finance whether by making loans or advances or otherwise for any activity other than its own but does not include an asset finance company. So first type, asset finance company, which provides loans for physical assets, financing of physical assets, and then investment company, which deals with the acquisition of securities. And then third type is loan company, which is a financial institution carrying on its providing finance whether by making loans or advances. And the next one is infrastructure finance company. Okay, so it is a non-banking finance company which deploy at least 75% of its total assets in infrastructure loan and has a minimum net owned funds of rupees 300 crores and has a minimum credit rating of A or equivalent and a CRR of 15%. So systematically important core investment company is also there. Uh, we have infrastructure debt funds, microfinance institutions. There are so many types of non-banking institutions. Then we have mortgage guarantee companies, non-operative financing holding companies. There are so many. Okay, so we also need to understand here about the venture capital. So we have just few classes to cover the whole syllabus. So I'm just going with the important points. So please understand. So what is venture capital? Venture capital also refers to the risk capital supplied to growing companies, and it takes the form of share capital in the business firms. In our country, venture capital comprise only seed capital because finance for high technology and funds to turn research and development into commercial production. So usually in broader sense, we can understand that venture capital refers to the commitment of capital and knowledge for the formation and setting up of companies, particularly to those specializing in new ideas or new technologies. For example, startups. We understand more, we can easily start up. So those who have ideas, those who are uh, pre business mode. So for them, this venture capital is very helpful. They invest in their budding companies and they'll take some equity from those companies. Okay. Then we also understand about merchant banking. Merchant banking is defined as an institution or an organization which provides a number of services, including management of securities, portfolio services, underwriting of capital issues, insurance credit, credit syndication, financial advisors, project counsel, etc. So venture capital and this merchant banking are two different. So these are the different non-banking financial institutions. So now let us go with the next topic, that is money market. So what is money market? So in earlier class, we have discussed briefly about what is money market, what is capital market. Here we will understand about a whole money market feature, how the what are the main functions of money market and how the organization of money market will take place along with small money market also. Okay. So what is money market? Money market is the nerve center of the financial system. Okay, why we are calling it as nerve center of the financial system? Because it is a market for short-term funds and it provides funds for less than of 1 year, less than a period of 1 year. Okay, so these what actually the money market does is Money market mobilizes saving from different sources and makes them available for investment. Okay, understood. So money market is for short term funds and it provides funds for less than a period of 1 year. So it deals with buying and selling of short term treasury bills, short term instruments such as treasury bills and commercial papers, etc. Then money market consists of negotiable instruments such as treasury bills, commercial papers, certificates of deposits. Okay. It also which meets the short-term requirements of borrowers like financial institutions and governments. Okay. So what actually the main importance of money market is financing trade, financing industry, and it is an profitable investment. And then there are different money market instruments are there. We'll discuss about those clearly. What are the different money market instruments? So let us understand the definition of money market. Okay, we will understand about what actually the money market means. Okay, according to Crowther, the money market is a name given to the various firms and institutions. Okay, various firms and institutions that deal in the various grades of mere money. And normally, usually money market, according to RBI, the money market is the center for dealing mainly of short character in monetary assets. It meets the short-term requirements. It meets the short-term requirements of borrowers and provides liquidity or cash to the lenders. It is a place where short-term surplus investable funds at the disposal of financial and other institutions and individuals are bid by borrowers. Again, comprising institutions and individuals and also by the government. So in simple words, we can understand that money market basically refers to a section of the financial market where financial instruments with high liquidity and short-term maturities are traded. So money market has become a component of the financial market for buying and selling of securities of short-term maturities of 1 year or less, such as treasury bills and commercial papers. Okay, I hope you have understood what is money market, how the money market deals with. Okay, money. So in simple terms, actually the money market consists of negotiable instruments such as treasury bills, commercial papers, and certificate of deposits. And it is used by many participants, including companies, to raise funds by selling commercial papers in the markets. Okay, money market is considered as safe place to invest due to the high liquidity of securities. Okay. So what are the features of money market? It is a market for borrowing and lending short-term funds, and it deals with the short-term instruments having maturity period up to 1 year. Okay. Then it deals with only those instruments which can be easily converted into cash without loss and at a minimum transaction cost. At a minimum transaction cost. And the money market is an unregulated and informal market and not structured like the capital markets where things are organized in a formal way. But money market gives lesser return on investors who invest in it but provides a variety of products. Then there are no formal place for conduct of operations in money market. The transactions take place mostly through phone. Okay, mostly through phone only the transaction will take place. So the transactions in the money market are dealt without the help of brokers. Okay, without the help of brokers. And the participants in money market are central banks, commercial banks, non-banking financial companies, and discount houses, etc. Okay. And then objectives. What are the objectives of money market? So the main objectives of money market to provide an opportunity or a place to employ short-term surplus funds. So those who are in need of fund, short-term surplus fund. So these money market will provide them with the short-term surplus fund. And they also provide a place to overcome short-term deficits. They provide access to the users of short-term funds to meet their requirement at a reasonable cost and to enable the central bank to infuse and regulate liquidity in the economy, though is intervention in the market. So they provide credit for government, commercial banks, and individuals for their short-term needs. Okay, these are the main objectives. First is to provide an opportunity or place to employ short-term surplus funds and to provide a place to overcome short-term deficits and to provide access to the users of short-term funds to meet their requirements and also to enable the central bank to infuse and regulate liquidity. Okay, so these are the main objectives of money market. Now we'll understand about what are the main functions of money market. So before going to the functions, we'll know a developed money market plays a vital role in supplying adequate short-term funds to agricultural infrastructure, trade and industry. And it is an important factor for development of an economy of any country. And the functions of money market in smooth functioning of the financial system in any economy. And then the main function of money market is to maintain monetary equilibrium. Okay, how it maintains monetary equilibrium? It helps to maintain demand and supply equilibrium with regard to the short-term funds. Okay, and then financing trade and industry. So money market is an important source of financing commercial enterprises on short-term basis. It plays a crucial role in financing both domestic and international trade. And traders use bills of exchange for their short-term requirements. Then the bills are discounted by the bill market and the activities in the international trade are carried out by the acceptance of house. So thus the money market, though through its discounting operations and commercial papers, provides short-term funds to meet the working capital requirement of the industry. Okay, so what is working capital here? Working capital means a day-to-day needs of the business. So when the business actually needs a deficit of short-term funds, they'll approach money market for getting funds, short-term funds. Okay, so working capital is very important for smooth functioning of the production schedule of the industry. So for working capital requirement and short-term requirements, the individuals, companies, government, commercial banks they take the help of money market. So for this reason, We are calling money market as an important source. Okay, important factor for the development of an economy of any country. So now it will financing trade and industry. Then it will influence the capital market. Okay. So what is capital market? Capital market usually deals with the long-term finance. Okay. So here uh, influence on capital market, the long term requirements of the trade and industry and met through the capital market. So the availability of funds in the money market and short-term rates of interest will give an influence on the resources mobilization and also interest rate in the capital market. Hence, the development of capital market depends upon the existence of a developed money market. Okay. So the next function will be the ideal investment for commercial banks. Okay, ideal investments for commercial banks. So commercial banks will also invest in money markets, as the function of commercial banks is to accept deposits from the public and advance loan to the borrowers. Then sometimes what happens is that the commercial banks may have surplus funds, and in such instance the money market provides an ideal opportunity for commercial banks to deploy its surplus funds in easily realizable assets. Okay, as to meet its statutory reserve requirement, as we all know, CRR and SLR are the very their statutory reserve requirements from RBI. So the banks can make profit from its surplus funds. Besides these, the money market provides liquidity to the investment made by the commercial bank. So whenever the commercial banks need, they can easily get back their money, as the liquidity is high in the money market. Okay. So then it helps to central bank. How it is going to help the central bank? The existence of a developed money market smoothens the functioning of the central bank. So how it smoothens the functions? So the money market increases the efficiency. It increases the efficiency of the central bank through implementation of the monetary policy, and the short-term interest rates in the money market enable the central banks to adopt an appropriate banking policy. So by this technique, the money market will help the central banks, okay, by increasing the efficiency of the central bank through implementation of monetary policy. Okay, then formulation of effective market monetary policy. So the one more function is that formulation of effective monetary policy. So the money market helps the government in formulating and revising the monetary policy depending upon the conditions prevailing in the market. Okay, so these are the main functions of money market discussed. Okay, students. Now we'll discuss about organization of money market. These uh, how these money market are organized. Okay. Uh, hello. Hello, students. Are you able to get my points?
Yes, ma'am.
So how these money market are actually organized? So in Indian money market has existence of both organized money markets and unorganized money markets. Okay. So the organized money market consists of RBI, all scheduled commercial banks, and other recognized financial institutions. Okay. So, however, the unorganized market comprises of indigenous bankers. Already we have discussed moneylenders, shawkars, sets. All these come under unorganized market. So, the organized market is regulated by the RBI And the RBI is the most important constituent of the money market organization. So in 1980s, till mid 80s, the organization of Indian money market suffered from serious deficiencies. Okay, now it is highly regulated as a technology intervention is also extended widely. So, firstly, there was an existence of large unorganized market comprises of domestic money lenders, indigenous bankers, traders, who are generally outside the control and RBI. So previously, you may ask your grandfather or mother or parents, they'll say whenever they are in need of money, what they used to do if they have gold, they'll take that gold to the some Marwadi and they'll mortgage that gold and they'll get the money on high interest. And this is happening now also in rural areas. But this indigenous market is also slowly getting regulated. Okay, so we have Manappuram gold. We have so many gold. We can mortgage our gold there. And in villages, what they used to do, they go to the state and they mortgage their property papers and they'll get money on high interest rates. So the state sometimes he may be not loyal. Okay, he may, if he give 1 lakh and he says that I have give you 2 lakhs, you have to give your whole house on my name, like that. There are so many issues. Now also we see in some movies also. Okay, so here the money market, one is organized and other one is non-organized, unorganized. So in mid 80s, there our money market has suffered from serious deficiencies. Okay, and domestic money lenders and were playing a major role. Okay, and secondly, the money market had a narrow base with only RBI, banks, LIC, Unit Trust of India. They are the participants in money market and very limited as the entry into the market was strictly. Okay, and then thirdly, if we can see the financial instruments deals with the money market where the market was not very active. Okay, so the market was dealing only with the money at call and short notice. Okay, so the fourth deficiency was that there were wide fluctuations in the rates, in the interest rates in the money market, as they were controlled by the RBI directly or by voluntary agreement between the participants through Indian Bank Association. So all these deficiencies were seen, huh? But in the light of the above deficiencies, many reforms have been introduced. So many reforms have been introduced by the RBI to bolster the Indian economy, to boost the Indian economy, which is in the state of constant flux and is continuously evolving. So based on the recommendations of S. Chakravarti Committee, okay, the government of India and RBI had had introduced one committee, that is Chakravarti Committee, Narsimhan Committee, Waghal, Vaghul, Waghal Committee. They have understood what money market and they have made some recommendations to overcome these deficiencies. As we have discussed now, how many deficiencies are there? There are four deficiencies, major deficiencies. Okay, one is majorly the market, money market is controlled by indigenous bankers and there are high fluctuating interest rates. And then the third one is money is available for only discounting bill, that is very short period. And then the money is very limited and that too strictly under the control of banks. Okay, so to overcome all these deficiencies of money markets, their various committees have formed, and the main committees are Chakravarti Committee, Narsimhan Committee, Waghal Committee, and Narsimhan and Waghal Committee. And money market reforms were introduced, which helped the unfold the banking potential of India, and shape our financial institution to world-class standards. Okay, and the soundness of these reforms helped our economy to easily tide over the economic crisis which gripped the world in 2008. So in 2008, we should big thanks to our previous Prime Minister Manmohan Singh and PV Narasimha Rao. In their period, they made so many reforms in our banking sector. In the year 2008, a big crisis has been evolved all over the world, but thanks to them and their strong recommendations and rules, and they have the future perspective way how they think, they formed various committees and they have introduced so strong reforms in our banking system. Even the America, developed countries like America and so many countries have faced a crisis, but our Indian banking system still stayed strong, and a big crisis happened in the year 2008. Okay, so the money market is not a homogeneous market actually. So it consists of number of sub markets, and those are call money market. Okay, commercial bill market, call money market, commercial bill market, and we have bill market, treasury bills market, and then dealers, commercial papers. Okay, there are so many different markets, money markets. So now we'll discuss about call money market. Okay, what is call money market? The call money market accounts for a major part of the total turnover of the money market. So it refers to the market for a very short period, loans ranging from 1 day to 14 days. Okay, only those who are need of loan, then take the loan, and within 14 days they have to pay back. Okay, from 1 day to 14 days. If an amount is borrowed for 1 day, it is called call money. If the period is more than 1 day, up to 14 days, it is called notice money. If it deals with funds for 15 days to 1 year, it is called term money. Understood, friends? If it is deal for very 1 day, it is called call money. More than 1 day, up to 14 days, it is called notice money. And more than it deals with funds for 15 days to 1 year, it is called as term money. Okay, so it is this market enables banks to even out their day-to-day demand for the supply of short-term funds. So it is purely unsecured market where no collateral security is required for securing the funds, and there are no brokers involved. So how the settlement will done? Then when there are no brokers, when there is no collateral security is involved, then what is the authenticity of this market? So the settlement is done between the participant through the current account maintained with the RBI. Okay, so the current account which are maintained in the RBI, through that the settlement will be done. Okay, so the low transaction cost, the ease of transacting the same day settlement of funds act as strong incentives for banks to access the call money market for managing intraday funding and CRR requirements. So the market is a highly liquid market and highly risky market too. Because it is why it is highly risky market, because it doesn't take any collateral security from the banks. So to meet the urgent requirements, to meet the very short period requirement, banks will approach money market. So the RBI through the current account which are maintained in the RBI, these money market will be dealt. Okay, so this is about call money market. Okay, then now we are going to discuss about commercial bill market. So a commercial bill is a short-term, negotiable, and self-liquidating instrument with low risk. Okay, so the market for buying and selling of commercial paper bills of exchange is known as commercial bill market. So the working capital requirements of business firms are met by the banks through cash credits, overdrafts, and purchases of discounting bills, commercial bills. Okay, so it is also one of the negotiable instruments. And according to Negotiable Instrument Act, a bill of exchange is a written instrument, as we all know, containing an unconditional order signed by the maker, directing a certain person to pay a certain sum of money. Okay, so it is how it is drawn. It is drawn by the seller of goods, who is known as drawer, on the buyer of goods, who is known as drawee. Okay, so when the trade bills are accepted by the commercial banks, they are known as commercial bills. Understood, students? Hello?
Yes, ma'am.
Are you getting my point? So,
yes, ma'am. Yes.
Commercial bill is different when we talk about call money market. So, commercial bills are drawn by drawee, and it is promising to pay certain amount for a certain period of time. And when the commercial bill is like check. Okay, when it is accepted by the bank, then it is called as commercial bills. Okay, banks generally accept commercial bills which are discounted by the payee, and the balance amount after deducting the discount is credited to payee account. Okay, there are different types of commercial bills, ma. Demand bill, nuisance bill, documentary bill, clean bill, island bill, foreign bill, will call supply bill, hundis, derivative usance promissory note. Okay, promissory note is also one of the negotiable instrument. Okay, then there are there are so many markets where these commercial bills are traded. Okay, students. So let us end our class today here. I hope you have understood what I taught today, and we have covered lot many topics in short time. I am trying to able to give the best knowledge to you. Okay, give you the main importance concepts to understand. Okay, as you have other class, now I am leaving this class. All the best. Okay.
Okay, ma'am. Okay.
Okay.